Stack it up, flip it, watch it multiply. No quick cash, got a plan, let it ride. Stocks, bonds, crypto, gotta diversify. Long game wins when the market's right. No handouts, made my lane, no shortcuts. Blueprint tight, every dollar got purpose. Risk low, profit high. I read the signs, turn cents to stacks, watch my empire rise. Meet me in corporate's corner where the winners stay. Money talks different when you play it the smart way. No reckless spending, we invest and elevate. Corporate's corner, that's the key to getting paid.
What is going on, everyone? This is Mr. Corporate here on Corporate Corners, where you get your investment edge. Today, I got a lot of great things to talk about for you guys, help you with your money investments. And if you stick around long enough, I'm going to give you a stock that will potentially take your gains 5 to 10x. Stay tuned. Welcome back, guys. All right, let's dive right into it. So first order of business, CNBC just posted that the Senate just advanced a bill to regulate stablecoins. This is called the Genius Act. Now, what that is and what it means for crypto is that it will allow anyone to create a stable coin. Let's say, for example, you have a business, right? Liquor business per se, and you want to create a stable coin, whereas it is backed 1-to-1 by the amount of money you hold in your business. So you can generate, let's say, for example, you have $500,000, you can generate 500,000 stable coins because it's backed by the amount of money you actually hold. And with that being said, your customers can come in and actually pay with your own stable coin. You could even set up incentives, whereas if they invest in your stable coin or put their US dollars into your stable coin, they will get some type of reward back for using it in your store. So what does that look like? I have a liquor store. I tell my customers about it. They invest their US dollars and actually purchase my stable coin. So $1 US, one liquor store coin. And when they use that to actually purchase liquor, I would say, hey, you know what? For you using my coin, I give you 10 cents off or 10% per se, right? So in return, instead of them paying the actual, let's just say a regular bottle of liquor that they normally buy would be $10. They come in, they're actually paying $9 just for using your coin. Now, how does this help the company? Well, more people actually investing in your coin helps you keep money or revenue into your company, right? If you already have $500,000 liquid US dollars and a group of people come in and say, hey, you know what? I want to take advantage of your incentive opportunities. They're going to start buying up your coins. Now, only 500K can be bought, of course, because that's how much you have liquid. Until you make more revenue, that's when you can generate more coins. So that being said, when they buy your coins and you intake this new $500,000 for selling 500,000 liquor coins, you can actually take that money and do other investment things with it. So when you make more money and become more liquid, you can now distribute more liquor coins. So that's a game changer for when it comes to big companies. When you think about Walmart, Amazon, Twitter, PayPal, like that is huge. My question is, how would that look towards banks? Would that take money away from banks? Absolutely. But understand this, a lot of these banks seen this coming. So they've already started investing into crypto and buying up cryptocurrency exchanges and platforms. So even though they may be losing money on this end, if this bill comes to pass, they're still, prepared for what's coming. So I'm pretty sure these banks already made money and are going to start making even 10 times more. So that's not an issue for them. Now, you may ask, what is a stable coin? So I'm just going to go ahead and read you the definitions that CNBC posted. A stablecoin is a type of cryptocurrency that is pegged to another asset, typically the US dollar, which makes it less volatile than other cryptocurrencies tend to be. Now, what does that mean? Again, it's pegged to the US dollar, 1-to-1. So if you have $1, you have one stable coin. Now, here's the issue when it comes to investing. Like when it comes to stocks, you could pour a lot of money into stocks, make a lot of money off of it. The problem is when a stock drops, what happens? You lose all that money. So what people tend to do, or investors tend to do, is play the chasing game with money, currency, right? The term currency means the flow of money. So when you think about it, if I put money into a stock and I make money, what happens when that stock drops? I start losing the money. So what you find investors do once they make their money, they withdraw it. They withdraw their profit and they find other ways to allocate that profit somewhere else, whether it's bonds, treasuries, trying to hold on to the cash and into a bank, high yield savings, things of that nature. The main issue that US is having is that the value of the dollar is just, it's going bad. It's dropping, especially with all this trade war and everything going on. Stable coins coming into play, you would actually be able to pull out that profit, keep it into a stable coin where it does not drop. The value of it does not drop. It's how much money you have. So if you have, again, $1 million, you have 1 million stable coins. That's just that. Then when you're ready to reinvest, you can use that stable coin to just pour it back into cryptocurrency or anything you want, anything of that nature. When you think of blockchain and its technology use, like a lot of people are putting assets onto the blockchain. You can have a house and pretty much if your equity in your house is $1 million, you can create 1 million stable coins and give it out, have people invest in you. CMB states that the currency is used in a number of ways, including for payments and futures trading. Since they're also more predictable than regular crypto tokens, traders also use stablecoins to sit out times of volatility and market downturns. So again, stablecoins, this could be a huge, huge game changer when it comes to the cryptocurrency investment or overall. If you don't want to get into cryptocurrency because you're scared of how volatile it is, then stablecoins may be the way for you, especially if you're a big company. Ultimately, the Genius Act could make stablecoins more mainstream by bolstering trust in the currency and encouraging more competition in the market. Right now, it is for intents and purposes of a duopoly. The market is nearly entirely dominated by Circle's USDC and Tether. If you don't know what that is, pretty much those are two top contender stablecoins. When stablecoins became big, these were pretty much the first two that came into play. So most of the market or most of the money when it comes to stablecoins are in these two. But now, again, anyone or any company legit can pretty much create a stablecoin. So you can take money away from the banks, take money away from these companies and put it into your own pockets. Not necessarily your own pockets, but I think this is huge. You definitely see this change in the financial market in the years to come. And if you're not into crypto, now's the time to get into it. Moving forward, the next topic we're going to talk about, a coin that I believe has huge, huge potential. And what they're doing could be a game changer when it comes to cryptocurrency itself. That token is called RSR. What you have is RSR, Reserve Rights Token, and you have RSV, which pretty much is the stable coin for the company Reserve Rights. Pretty much what they are doing is when you think of ETFs, apply that to cryptocurrency. They are allowing individuals or entities to create a basket of cryptocurrencies and turn it into an index. So with ETFs, when you think about your 401k, when you think about your IRA, when you invest into those, typically what the entity, let's say Fidelity, is doing is taking your money and pouring it into a basket of stocks that they believe will perform very well. When those stocks, say, let's take the top 5 tech stocks. You got Amazon, you got Apple, you got Facebook, you got Tesla, you got Google. We all know they perform very well. We use it every day, right? So when those stocks perform well, Fidelity makes a dividend or they get some type of incentive for investing into those stocks. So they get dividends, and what they tend to do is pay it out to you guys, 401k holders, IRA holders, the average Joe working 9 to 5. So what Reserve Rights Token is typically allowing people to do the same thing. Anyone can create these baskets. I myself can go on the platform and create any cryptocurrency. Obviously it has to be legit, got to go through some red tapes. But if I'm a legit entity, I can create a basket of cryptocurrencies and allow people to invest into my index. So what they are calling this is decentralized token folios, DTFs. And Again, I think this is huge. This is huge because let's go back to being a liquor store. Let's just say I create 5 different cryptocurrencies for, well, can't say different brands of liquor because that would be copyright infringement. But let's just say I create a stable coin, right, for my liquor store. And my liquor store is booming. I got lines outside of the doors. If you guys were in COVID, you know how it was. A liquor store line was packed. Um, and I generate a lot of money. What tends to happen is anyone that uses reserve rights platform to incorporate or create an index could say, hey, you know what? That moms and pops liquor store was booming. They actually have a stable coin. I want to incorporate that into my portfolio and have people invest into it. So what tends to happen now is if you have a wide range, not just more localized where it's your, customers, a wider range of uh, big name companies or even people, mom and pops, 9 to 5s, just invest into 401ks, investing into your stablecoin that generates more revenue for your company, right? So this is definitely something interesting that I believe this is going to go far. And not to mention, the former CEO of PayPal is heavily invested into them. So that should tell you a lot, man. Speaking of DTFs, one of them that I'm highly interested in is CoinDesk's very own DTF. They have a great basket of cryptocurrencies that I see performing well. Even in the past when they came out, it's been doing great. And this pretty much the price it is right now is fairly good. Think about it. If you invest if you're afraid of investing into individual or particular stocks or cryptocurrencies itself, this is where ETFs and DTFs comes into play because now you're not trying to guess and decide what cryptocurrency or what stock to invest in. You just invest into this particular portfolio, which has a baskets of stocks or cryptocurrencies. And, depending on where the percentages lie, for example, it's 5 cryptocurrencies in this basket. One of them may be Bitcoin. They may say, you know what, 30% of the investments go into Bitcoin. Then you have Ethereum, 25% goes into Ethereum. Then you have 3 others that they highly believe will do well in the short coming future, where they allocate that percentage. So based on how well those stocks or cryptocurrency does, determines or dictates how well the ETF or DTF does as well, based on percentages wise. And when they do perform well, you get a dividend pay out of that. So again, CoinDesk's DTF that I see on the reserve rights platform is pretty great price, pretty low. Only issue is the amount is limited. Let's think about traditional stocks. Only a certain amount can be attributed, right? And based on demand, they can create more. So with cryptocurrencies, it's a finite amount. No more can be created. But the more that a person invests into, let's say, Bitcoin, the higher the price it goes, which makes it very harder or much harder to actually purchase, one whole Bitcoin. So if you think about when Bitcoin first came out, Bitcoin was probably 1 cent. Now it's over $100,000. Not too many people have over $100,000, right? So as more people pour money into Bitcoin, the price of Bitcoin gets higher and you get a smaller fraction of a whole Bitcoin itself. With ETFs and ETFs, it's a finite amount up until demand has increased. So that's when they can issue more coins. Now, that will cause the price of the share to drop. However, if the demand is high, it will come back. So the price will go even higher than the last high point in essence. So something to take a look at. ETFs, DTFs, if you're a current investor or thinking about learning how to invest, those are 2 good ways of investing, 2 options if you don't want to directly dive into cryptocurrencies or stocks itself. Now, speaking of CoinDesk, one thing I want to highlight is The owners of CoinDesk is called Bullish Global, and pretty much they acquired CoinDesk back in 2023. Now, remember when I said stick around for that stock tip? Yeah, that stock tip is Galaxy Digital. You can look it up on Cash App, Fidelity. Um, I think, first of all, they just launched the IPO recently in May. So the stock price you see right now is pretty fair. That's what they think the company or the stock price is valued at. In regards to Bullish and CoinDesk, Galaxy Digital and Bullish are in partnership. And with that being said, they are working on DTFs as well. So again, going back to the DTFs, if you don't want to invest in a stock, you can invest into the DTFs or ETFs. But going back to the stock, I definitely think Galaxy Digital is a stock you should be looking at. The price is faring around $18, $19. And I see this going to $100 to $130. So that's roughly 10x your gains. Let's call it 7x your gains. Yeah, so guys, thank you for watching. Let me know what you think. Make sure you drop a like, subscribe to my channel if you haven't already. And I'll see you next time on Corporate Corners.
Maybe in corporate's corner where the winners stay. Money talks different when you play it the smart way. No reckless spending, we invest and elevate. Corporate's corner, that's the key to getting paid. Clocking on the markets, morning to the late night. Making moves while they snooze, got my game tight. Never put my wealth in just one site. Gotta spread the risk, gotta build it right.